The S&P 500 is a market capitalization-weighted index of 500 companies that represent the largest publicly traded companies in the U.S. The index is often used as a gauge of the U.S. economy and its performance. The index is divided into 11 sectors, which are further subdivided into 24 industry groups, 69 industries, and 158 sub-industries. The S&P 500 sector weightage by total market capitalization: technology, 26.1%. Healthcare, 14.2%. Financials, 12.9%. Communication services, 10.8%. Consumer durable, 10.1%. Consumer staples, 7.2%. Industrials, 8.7%. Energy, 4.6%. Utilities, 3.1%. Real estate, 3.0%. Materials, 2.5%. You can see that the technology sector is the highest value or the most weightage one, followed by the healthcare and the financial sectors. The materials sector is the lowest value or the least weightage one, followed by the real estate and the utilities sectors. The S&P 500 index dropped by 5% or more from the previous peak 17 times from 2000 to 2023. Percentage drops of these occurrences: March 24, 2000 to October 9, 2002, minus 49.15%. October 9, 2007 to March 9, 2009, minus 56.78%. April 23, 2010 to July 2, 2010, minus 16.00%. April. October 3, 2011, minus 19.39%. May 21, 2015 to August 25, 2015, minus 12.35%. November 3, 2015 to February 11, 2016, minus 13.31%. January 26, 2018 to February 8, 2018, minus 10.16%. September 24, 2018, minus 19.78%. July 26, 2019 to August 5, 2019, minus 6.79%. February 19, 2020 to March 23, 2020, minus 33.92%. September 2, 2020 to September 23, 2020, minus 9.63%. October 12, 2020 to October 30, 2020, minus 8.90%. February 12, 2021 to March 4, 2021, minus 5.96%. May 7, 2021 to May 12, 2021, minus 5.20%. September 2, 2021 to September 20, 2021, minus 5.15%. October 18, 2021 to October 27, 2021, minus 5.32%. November 8, 2021 to November 29, 2021, minus 5.67%. The S&P 500 trade volume is the total number of shares traded in the index during a given period of time. It reflects the liquidity and activity of the market. The S&P 500 price fluctuation is the difference between the highest and lowest prices of the index during a given period of time. It reflects the volatility and uncertainty of the market. You can see that the trade volume and the price fluctuation of the S&P 500 index do not always move in the same direction. Sometimes, the trade volume increases when the price fluctuation decreases, and vice versa. This may indicate that there are different factors that affect the supply and demand of the market, such as earnings, dividends, interest rates, inflation, geopolitics, and investor sentiment. You can also see that the trade volume and the price fluctuation of the S&P 500 index tend to be higher during periods of market turmoil, such as the dot-com bubble burst in 2000 to 2002, the global financial crisis in 2008 to 2009, the COVID-19 pandemic in 2020, and the global inflation surge in 2022. This may indicate that there are more investors who trade in and out of the market, seeking to profit from the price movements or to avoid losses. You can also see that the trade volume and the price fluctuation of the S&P 500 index tend to be lower during periods of market stability, such as the post-recession recovery in 2003 to 2007, the post-crisis expansion in 2010 to 2019, and the post-pandemic rebound in 2021. This may indicate that there are more investors who hold on to their positions, expecting the market to continue to grow or to remain stable. The forecast called multivariate time series forecasting is focusing on a particular type of method called ARIMA modeling. ARIMA, short for Autoregressive Integrated Moving Average, is a forecasting algorithm based on the idea that the information in the past values of the time series can alone be used to predict the future values. This is the predicted result by ARIMA with Python.
This is my magazine channel. Thanks for watching. Please subscribe.